Hello, Jason here. Today is May 11th, and this is your aftermarket update. So I wanted to come on here today and give you a quick recap of today's trading activity here at the Oil Trading Group. In addition to that, I wanted to talk a little bit about the OTG Trend Finder and the OTG Pivot Times, both the indicator and the trade plan with our pivot times. I wanted to spend just a minute with you talking to you about how today was, and then we'll come back and kind of give you the summary. So first of all, we're going to take a look here. Again, this is your OTG trade plan with your pivot times. Today, you had both a major trend idea at 8:01 and the minor move within the trend at 8:02 a.m. So when you have two times like this where you're expecting back-to-back movements, you're expecting that to be a fairly decent move. And on the day today, we did have two back-to-back moves here. We had the 8:01 and there's the 8:02 candle. Now, this OTG Trend Finder here, these dots do not auto-populate. They are dots and triangles that I put on the chart just for illustration purposes here, but I don't want you to be confused. These do not auto-populate on your chart, but these lines here and here are ideas that I put on the chart here just to help illustrate here. So, okay, so at 8:01 a.m. today, you had the first indication. The trend is in our direction. There is the aggressive trend. You can see how that aggressive trend was moving down. And here is the standard trend, and you can see how it began to move down as well. But both of the trend indicators were lined up in our direction today. And so this was a valid entry. Now, the problem with this entry is that it did immediately move from 59.36 all the way down to 59.08. That was 32 ticks on one minute bar, and that was a very aggressive move. Now, you may ask yourself, by the way, the entry calls for the open of the very next candle. So you may be asking yourself, well, why not just, if you think that that's where the move is going to occur, is up here, why wait to here to get into that move? And that's a fair question. What I want to show you, though, is that this entry system is predicated upon being with the trend. So at this time of the day where we are expecting a move, we want that to be in line with our trend. Okay, so if you take a look here, the trend here at this point was up here at, the aggressive trend was up here at 59.43. Okay, 59.43 was the aggressive trend. All right, and as such, that 59.43 could have very easily, this was a 32 tick bar on the open of this bar. It could have easily gone 32 ticks the other direction, opened here at 36, and 32 ticks later, close up here at 58. That would have been above both trends. Trend filters, it would have suddenly made the trend long, and this was a time of day where we were expecting the direction to be short. So that would have gone against us. So we have to wait for the open of the next bar. That's exactly what we did. In fact, 59.13 was the open of that bar. It immediately came down to it and then pushed up. I got in at 14 long. Your trailing stop then becomes this, trailing stop becomes this standard trend filter, which is where these arrows here, these red arrows are here. All right, so if you take a look at this, I was in at 14. It came up to 30. My stop actually was 31. I had it one tick behind it, and that was 17 ticks, and that took me out there at 17 ticks. Okay. It was early in the day. We thought we were going to have plenty of opportunities as we move through the day. The next two times that we come up on here, that is 8:44 and 8:47. Just take a look here really quickly at your trade plan. There's 8:44 a.m. long, and here is 8:47 a.m. long. Again, two indications back to back. You would expect that to be a decent move to the top side, but the problem here is that the filters didn't line up. So these were both ideas, that the market would move up long, but your trend filters, both of your trend filters here, the aggressive was telling you short, and the standard trend filter was also telling you short at the time of the entry bar. Now, this is going to be a key theme throughout the day today. You could see that the market was moving up and up and up and up and up. And then as soon as we got to within about 5 minutes, 1, 2, let's see, 1, 2, 3, 4, 5, 6 minutes of our signal bar, both bars had moved down and the trend had changed short instead of looking to get long. That happens. That was not a valid entry, and that happened quite a few times today. If you continue to scroll down the chart here, right here in this time, this could have been a potential winning trade here today, and we could have, should have actually picked up at least, we ended up getting a break even. It could have been a 15-tick winner. I'm not sure if you would have gotten filled. In fact, you probably would not have actually. So let's take a look here. I had some NinjaTrader issues around this time. In fact, my antivirus software that I have on my computer had been turned back on inadvertently during the trading, and as a result of that, it was slowing down my computer tremendously. So we had to get that figured out. By the time I got into this trade, I was in short here around the 24 level. The technical entry should have been right up here at 31. That should have been the technical entry. 31 came down to 16. That's 15 ticks. That would have been your first target had you gotten in at 31. That would have been your first target, would have been 15 ticks down to there. Probably not going to have filled it though, but you definitely would have triggered the break even. That would have brought you up here, break even at 31. I actually took out at break even at 24. And there was another trade, and this was valid because again, it is with the filter, right? Here is your filter, short, your big picture filter. Here is your more aggressive filter. Both of these indications were short. And so again, the market moved down and it was a break-even trade. Continuing on, not with the filter, not with the filter. These are all trades throughout the day. Again, 2 trades here, but again, not with the filter by the time. And again, like I said, it was with the filter all the way until bar 1. Actually, it was the signal bar that came down. If this would have closed above this line, we would have been looking to get long. But this did keep you out, right? That did keep you out of that trade. Right here at 10:14 a.m. Let's take a look at that. So at 10:14 a.m., you had another signal that was short. All right, this short signal here at 10:14 a.m. All right, so let's take a look at this. Here is 10:14 a.m. The entry here was 98, and this is right in the area where I did get in. It comes down to 88, which is your break-even trigger. Comes back up and takes me out at break-even. Does come down eventually to 84, and then ultimately 75. So that would have ultimately have given you had you not been taken out at break-even. But again, we have the break-even filter in here at 10 ticks. It does end up saving you more times than not. And so again, the trend was in line, but the market was very choppy today. The market was very, very choppy today. And so this did give you an opportunity, could have given you as many as 23 ticks down here. But again, we went ahead and got out of that trade at break even. Another trade here that, again, does the same thing. We were watching for this short here. The big filter stayed intact, but the bar right at the signal bar, this is what I'm talking about, ends up closing above, changing the filter from the aggressive filter from short to long, therefore invalidating the entry. And then we go through this whole series of just choppy, sloppy trading conditions. Here, again, same thing. This was a short entry, but the filters were pushing long. This was a short entry here. Sorry, this was a long entry. Sorry, this was a short entry. This was another short entry. And again, the filters were still, one filter was long and the other filter was short, thus negating that opportunity. You can see here that, again, 2 short opportunities here, but again, the filter, the bigger term filter was not short, right? The bigger picture filter. So these filters were not in agreement. And so that's basically how the day progressed. We went through this same drill all the way through the rest of the day. So the day ended up being a losing day, 17 ticks. And again, we were talking about this in the trade room today. If the worst that you're going to do is have a 17-tick losing day, then again, things are not that bad. One of the things, though, that I do want to show you here, I'm just going to pull this chart out in front of you here. And I want you to take a look at something. First thing I want to draw your attention to is down here in the bottom left-hand corner. We were 110 ticks was the total range today. The 10-day average is 193 ticks, and the 20-day average is 199 ticks. From about, let's see, from, this is right here, from 11:55, even going back a little bit further, really from about 10:30 this morning, 11:30, 12:30, 1:30, for 3 hours, we spent from 83 candle bodies, I'm measuring here, to 28. That's a 45 tick range in 3 hours. And so look at all of these alternating red-green candles. What this simply means is that there was not a trend today. It is this type of trading right here that typically gives traders a lot of problems, right? If you can say, look, your range is from here to here, right? And you have false breakouts above and a couple of false breakouts below, but really your trading range is 17 ticks to the 0, 0, and 28. That's 45 ticks low to high with alternating red and green candles all the way around. That is very, very difficult trading conditions. In fact, this is not just 10:30 to 1:30, which is right here, right? This is when the market closes, is right here. If you look back here, right here is 1:30. This actually is even a little bit less than that. That's down to 26. That's a very narrow range for the balance of the trading day. It extended all the way out in that same area all the way until, well, as we're making this video, it is a little bit after 4 p.m. Central Time. So again, a very narrow, choppy range. So on a day like this, when it is very difficult trading conditions, if you can maintain your losses like we did today to 17 ticks, that is phenomenal, right? That is a phenomenal accomplishment. That is a really difficult thing to do. The other thing that I want to show you that should give you some encouragement is that if you take a look here at the backtesting program that we ran, we did, if you haven't seen this already, we have done the CL backtesting that covered 471 setups from May 8th, which was Friday, all the way back to November 17th. The thing that I want you to see here is that when you traded the standard filter on a 4-lot, the average losing trade was 177 or 17 ticks, right? That's a per contract, by the way. That's on a per contract, but that's a 17 tick per contract losing trade. That is right in line with where the averages are, right? That's right in line with where we are. Well, I want you to come up here and look at what the win percentage was, and again, where the gross profit was for that same time period. So again, plan so far adhering to where the losses were exactly where we thought they would be, and so now it's only a matter of time until we get the wins to where we think they should be as well. So again, overall, it was a losing day. We did maintain and minimize the amount of loss today to 17 ticks per contract. And again, on a trading day where the conditions are very choppy and difficult, that is a very good way to minimize the amount of risk on a particular trading day. So anyway, I wanted to go ahead and go through that information with you. As always, I want to say thank you for spending time watching what we do here at the Oil Trading Group. And until tomorrow, I want to wish you good luck and good trade.